This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia increased the price of its Arab light crude for the Asian market by 40 cents per barrel in May, compared to April, and lowered those for the US and European markets by 10 cents per barrel and 20 cents per barrel respectively, according to a statement from oil producer Saudi Aramco. It set the Arab light price for Asia at plus $1.80 per barrel versus Oman, Dubai average, at plus 85 cents per barrel versus ASCI for the US and at minus $2.40 per barrel versus ICE Brent for Europe, the company said.
Oil fell more than 3% on Monday as rising supply from OPEC Plus and higher Iranian output countered signs of a strong economic rebound in the United States and expectations of a wider demand recovery in 2021. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC Plus, agreed on Thursday to monthly production hikes from May to July. OPEC member Iran, exempt from making voluntary cuts, is also boosting supply. Brent crude for June fell $2.11, or 3.3%, to $62.75 a barrel by 11:21 p.m. Eastern Daylight Saving Time. U.S. West Texas Intermediate crude for May dropped $2.27, or 3.7%, to $59.18.
Moving on to the top news in the energy sector.
Ukraine has sought to increase sea-borne imports of diesel because of the threat rising tensions between Moscow and Kyiv could disrupt supplies from Russia, traders said on Monday. Tensions between Russia and Ukraine have flared in recent weeks after years of strain began in 2014 when street protests in Kyiv resulted in the flight of the pro-Moscow president and annexation of Crimea by Russian forces. Refinitiv data showed the tanker Professor Aziz Aliev shipped a diesel cargo of 6,000 tons to the Ukrainian port of Reni from the Georgian port of Batumi on Thursday. A cargo of the same size is expected in the port of Odessa from Batumi in the next few days.
Malaysia's state oil company Petronas signed an agreement with Brunei on Monday to jointly develop two offshore oil fields. The Gamusit Kakap and Jaragang Jags East fields straddle the two countries' maritime boundary. The tiny Sultanate of Brunei is surrounded by the Malaysian state of Sarawak on the north coast of the island of Borneo. Having now formalized this landmark agreement, Petronas believes that both parties can look forward to continuing the strong momentum towards developing our nation's energy sectors for the long-term growth and prosperity of both Brunei and Malaysia, said Petronas Group CEO Tengku Muhammad Taufik said in a statement. Next, we have the top news in metal markets. Money managers in the gold, silver and copper markets cut their net long futures and options positions in the latest week, according to data from the Commodity Futures Trading Commission. COMEX gold speculators cut their net long position by 5,548 contracts to 50,463 in the week ended March 30th. Meanwhile, COMEX silver speculators cut their net long position by 1,659 contracts to 21,236 in the week, and copper speculators cut their net long position by 2,362 contracts to 43,179.
Global copper smelting slipped to the lowest levels in at least 5 years in March as top producer China failed to recover following the Lunar New Year holiday due to supply shortages, data from satellite surveillance of copper plants showed. Weakness was seen across the board as other regions, which had been hit by pandemic-linked lockdowns, failed to make up for decline in China, satellite service Savant and broker Marex Spectron said in a joint statement on Thursday. The margin pressures smelters face from a shortage of concentrates has been closely followed, but activity within Asia seems highly sensitive to that factor, said Guy Wolf, global head of analytics at Marex, which helped to develop Savant.
We will now look at the top news in the agricultural sector.
Sri Lanka on Monday banned imports of palm oil and new palm plantations, and told producers to uproot existing plantations in a phased manner, in a surprise move that baffled the edible oil industry. Palm oil imports and the number of plantations have been increasing in recent years in Sri Lanka, a leading producer of coconut oil. Sri Lanka's President Gotabaya Rajapaksa said in a statement the aim was to make the country free from oil palm plantation and palm oil consumption.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.